Do you want to know a secret that separates the seasoned professional traders from people that are just starting out? It's not a magic indicator, it's not a magic strategy, it's actually understanding the trade environment that you are in. As a matter of fact, a lot of people when they first start, they try to approach every single day the same, with the same strategy, with kind of the same risk tolerance and all of that stuff. And what happens is they get burned because they don't understand this one simple concept. So, what I want to do today is I want to help you learn to break down the market's mood and know exactly when to strike as a trader or when to stand aside and stay out at all. So before we jump in, let's do a quick refresher on some other stuff that I have taught in the past just to make sure that we are all on the same page here. Okay, so let's talk about trends for just a second before we jump into understanding market environments. So when it comes to trends, trends are going to show you where money is moving. So they're going to show you exactly where people are positioning, where they're getting in, where they're buying, and stuff like that, where they're selling. What the environment is going to do is the environment is going to tell you exactly how you should play your hand. Is this a risk on day or a risk off day? Should I trade in the direction of the trend or should I fade the trend? What should I do? Because what ends up happening is if you try to trade against the trend or you try to ignore the market environment, you're actually fighting against the current of the market. But if you'll learn to read the clues that I'm going to show you in today's video, you're going to know when to be aggressive, you're going to know when to be cautious, and you're going to know when to simply just sit on your hands and wait for a better setup. So let's start with the basics for a second, okay? Is the market trending up, or is it trending down, or is it trending sideways? Uptrends are your friend for long trades. So you're going to look for higher highs and you're going to look for higher lows in the price on whatever time frame you're looking at. Downtrends, on the other hand, are going to favor shorts, okay? So you're going to want to trade to the downside with downtrends. And when the market is trading, and that's going to be shown by lower highs and lower lows. So when you see the price consistently not being able to break above previous highs and go lower, and then it continues to break lower than previous lows, that's when you know that you're in a downtrend. And then when the market is sideways, that's when patience pays off, or that's when you switch to more range-bound trading strategies. Okay, so we've got that out of the way. And if you need more help on understanding trends or spotting trends on a chart or whatever, I've got a video that dives into more detail on trends. It will be available at the end of this video, so I would encourage you to go and watch that on your own because this video in particular is about market environments. Let's talk about market environments. Now, there are 4 market environments that we are going to cover today, and these are what I would consider 4 of the main market environments that you are going to encounter. There are arguments that there could be more, there could be less, but these are the 4 that you're going to see time and time and time again. You're going to see continuation trend days. You're going to see overextension trend days. You're going to see inside consolidation days, and you're going to see volatile but range-bound days, okay? So what this means is that each day, the market is giving you a different landscape. It's giving you a different environment. And it's going to fall somewhere in the bigger picture of the trend, which is why you need to understand trends. But in the bigger picture of the trend, you are going to get one of these 4 environments. So your job as a trader is to quickly find out what type of day is this, and then to adjust your strategy and your trading style to the market environment in front of you. So let's talk about what each of those are, and let's talk about how to spot them, okay? The first one we want to talk about is we want to talk about trend days. Trend days in general are the days that they continue to play out the same direction all day. They usually go one direction most of the day. And when it comes to trend days, there are 2 different types. There are continuation trend days and there are overextension trend days, okay? So let's talk particularly about continuation trend days to start with. Continuation trend days start with strong moves outside of the previous day's range, and then that trend continues with higher highs and higher lows. And these are really good for strategies that follow trends, and they're good for breakout trades. Basically, before the move continues higher, you're able to get in after a short period of consolidation. And so on continuation days, the trend is going to be your ally. And so the market is going to break out, and it's not really going to look back too far, and you're going to be able to get in at multiple places in the trend and ride the trend and make some money. And so what you want is a strategy that's going to help you ride the waves of the trend days. And don't worry, if you need help with any of these things, you need help with a strategy that's going to help you ride the trends, it's going to help you on choppy days or whatever, I've got courses to help with all of that, okay? I've got everything that you need to be a successful trader. But what I want to do is I want to give you some examples of what a continuation trend day looks like. And a great example of that would be particularly today, the day that I'm filming this. So if you look over here on the chart, you can see that this is today and this is yesterday. You can see that yesterday we had a move that actually was up, and then today we opened right near the top of yesterday's high, and then we continued higher all day long. That is a trend day when it comes to what it looks like after it's played out on the daily chart for a full day. What we want to look at is, what does this look like on the intraday? What does it look like internally? Okay, well, we have here this red line is the previous day's high. And you can see that very quickly after some initial consolidation towards the beginning of the day, the reason there was consolidation is because some news was being dropped about half an hour after the market opened. And so because of that, people didn't have too much conviction until after the news broke. But after the news came out, on this candle here, you can see that we broke out of this range, and then we continued much higher as the day went on before coming back and then testing a lower range and then moving up. But this is still, by definition, considered a trend day because we continued to move higher most of the day, okay? And one thing to note about this is this works the opposite direction as well. So if like you go here, and if we had passed through the previous day the opposite direction and gone down all day, a downtrend, it would be a very, very similar concept. You're going to open at or near the previous day's low. You're going to break through it early on, and you're just going to kind of continue that way the rest of the day. That would be a trend day to the downside, okay? So let's talk about the other type of trend day, and these are overextension trend days. And these tend to happen after a big gap up or a big gap down, or at least a big move. Sometimes these can be seen also in the RSI. If the RSI is overbought or oversold, you can expect some trend days in the opposite direction as well. But basically what this means is typically you have a reversal of direction. And so if the market makes a really, really, really big move in the overnight hours, you tend to get a trend day in the opposite direction of the move, okay? So let's look at what this looks like on a chart here so that you can see what I'm talking about here, okay? On back here around March 31st or so, you can see that we had moved down. We had actually had a trend day down, a continuation trend day down, and then we gapped down the next day. This is the opening price. You can see we closed here, we opened all the way down here. And then what happened? Well, we had an overextended move because of that, and then we had a trend day towards the direction of the gap fill all day the next day, okay? So let's talk about what this looks like when we are zoomed in, okay? So you can see that this is the previous day's low, and then this is the opening price here. So after some initial fear, because that's usually what happens when there's a gap in the market, there's some initial fear, you tend to get another continued move down because people are scared. But then after everyone who has gone short starts to take their profit, buyers start to step in, and we end up breaking out of that opening range where we opened, kind of having a V-shaped recovery, and then we have a trend day back towards the previous day's low all day, and then it continued higher, okay? So what happens when this plays out, and I'll give you another example of this too. If you look over here around May 20, let's see here. Let's see if I can find one. Yeah, if you look over here around, here we go, May 24th or so, you can see that we had a gap up a couple days later, and then it just sold all day, okay? And you can see this as well. So we gapped up here, sold down, okay? And you can see this zoomed in on the chart as well. We have our gap up here, and then what do? Well, almost immediately after the gap up, we start to sell, okay? And then we sell all the way back down to the previous day's range, okay? So this is something that you will see happen all the times. And the reason this happens is because sometimes the market opens so far from yesterday's range that it's like overcooked either to the upside or to the downside. And those days you have to be ready because they can snap back pretty hard. Now it's important that you wait for confirmation before jumping in. But sometimes, and many times, the best trade that you can take is the opposite of what everybody is feeling at the moment. It's a reversal trade, okay? So then the question comes up, well, what about those scenarios where that doesn't happen? What about when the market gaps up and continues higher? Or what about when it gaps down and continues lower, okay? What about when the gap doesn't get filled or it doesn't head towards a fill? Well, this is called a breakaway gap. And this many times is also a version of a trend day. And you just want to treat that like a continuation trade, okay? So one example of this would be back here around the 12th on this chart. You can see that we gapped up, and then after some initial selling, the gap didn't fill, and we actually continued up the rest of the day, okay? That is what's considered a breakaway gap. So what causes breakaway gaps? Well, breakaway gaps usually have a strong catalyst behind them. So usually there's like a reason that the trade continued. Usually some surprising news came out, like with a gap down situation, maybe there's a war or some sort of like virus going through, or some really surprising economic data. The president did something surprising. It could be any number of things, but usually there's a really strong catalyst behind a breakaway gap, okay? The other thing is you want to watch the volume at the open. When there's a ton of volume flooding in behind these moves, that's also a sign that you could be getting a breakaway gap in either direction. The other thing that is key here is it's not going to go back and test the gap, all right? You're going to have fairly quick continuation from the gap. And then usually this is shown by a trend day, okay? Now, I want to say one thing about breakaway gaps, okay? Sometimes breakaway gaps can be hard to spot in the moment because you have no idea after a big move has happened in the after hours or in the pre-market which direction this is going to go. And you're kind of gambling on which direction it's going to go, because I typically just personally don't tend to take breakaway gaps until later in the day, when the market has shown that it wants to continue that move and it wants to keep it up. I suppose it's possible to get in early on a breakaway gap, but here's a stat for you, okay? 80% of the time, gaps fill. And if you knew that you were going to choose the wrong direction 80% of the time, you'd probably wait for confirmation too, okay? So we've talked about trend days. Let's talk about the other type of trading environment that you're going to find yourself in. And these are the days that people tend to lose more money on, because the nice thing about trend days is if you find yourself on the right side of the trend, you can make a lot of money, and it's fairly easy to trade continuation. The other type of day that you're going to find yourself in is inside days, okay? And there are two types of inside days that you're typically going to find. One is tight consolidation, and the other one is like volatile range-bound days. Now, these days are going to look similar on the daily chart, but they're very unique, and so let's dive into those. The first one we want to talk about is, what is a tight inside day? Tight inside day is where price stays inside the previous day's range, and it's usually really, really choppy. These are one of the most difficult days to trade. When the price is only moving, like on an index, a couple of bucks, and then it'll move down a couple bucks, and then it'll move up a couple bucks, and then down a couple bucks. Those are some really, really difficult days to trade. Let me give you an example of this on the chart here, okay? Right here, you can see we had a day that was very difficult to trade because we just basically didn't go anywhere all day. And then the next day, we had another inside day of that range. So you're talking about a couple of very, very difficult days where price just consolidated, okay? You see how small the candle bodies are? Do you see how big the wicks are on each side? Those are easy days to lose money, okay? So let's show you the inside of this candle here, the day, how that progressed throughout the day. Well, we had an initial chop, and then we moved down, and then we stayed kind of in this range between 563 and 566 all day long, okay? So that's because price didn't do anything pretty much all day, okay? So inside days mean that there's indecision in the market. The market is taking a breather, okay? And listen, inside days are perfectly healthy. Price does not just go the same way constantly without looking back. What it has to do sometimes is it has to breathe and catch its breath after a big move and then figure out what the next move is. And so if the range is tight like that, the best advice I can give you is just skip it. If it's a large volatility range day, that's a different type of day. And it is going to look similar, but there's a little more opportunity when there's more volatility in the range, okay? Which brings us to our final market environment, which is volatile range-bound days, okay? So these are still stuck, but they're stuck in a range that is at least tradable. And where we tend to see this usually is in an uncertain but headline-driven market environment like tariff wars, for example, okay? So with these, you're going to get lots of movement and you're not necessarily going to have clear direction though, okay? So this is something that you can make money on if you're a really nimble trader, but the important thing with that would be about trading the range, okay? You want to trade the range, not the middle of the range. So let me show you an example of this one, okay? You can see that actually we had several days of what most people would consider a volatile and range-bound environment, okay? This is where there is a lot of movement one direction, but it slaps up against the top of the range and it comes back down and slaps that range and then goes back up. And you just kind of get this like kind of whipsaw action where you have a $10 or $15 range that's being traded in. And so you can catch some moves on those, but you have to trade them a certain way, okay? And range-bound environments like this, they can look exciting because you can capture some big moves, but they can also be really dangerous if you're chasing moves in the middle. And so the way that you want to trade these is you want to focus on fading the support and resistance. You want to go the opposite direction of the range at the extremes of the range, okay? So now that you know the different types of days that you're going to find yourself in, let's talk about how can I spot these things in the moment so that I can actually trade them accordingly, okay? And what I want to do is I want to give you 3 steps to do that. The first is this. Every day you're going to want to take a minute and you're going to want to mark the previous day's high and the previous day's low on your chart. So going back here, you can see that the way we would spot this continuation day is because we had marked the top of this range and the bottom of this range. And then we want to see where it opens and we want to see where it goes. So it opened up near the top of the range and then passed through it. So that's a sign that we're going to get continuation. What if it had opened up here, right in the middle? Well, if it had opened up here, right in the middle, well, now this can go any direction and this might just be an inside day. Or what if it touches the top of this range and then reverses back down? Again, we might be getting an inside day, but you're not going to know that if you're not marking the previous day's high and the previous day's low on whatever it is that you're trading. Okay, so that's your first step. The second step that you're going to want to do is you're going to want to look in the pre-market for any potential catalyst before the open or after the open. So basically, did whatever you're trading have news? If it had news, you should anticipate a potential trend day in one direction or the other based on that news, unless that move happened, unless the whole move happened in the pre-market or whatever, and we're just going to trade sideways. That does happen sometimes, unfortunately, okay? But your anticipation and your bias is going to be towards trends because of that. And then the other thing that you want to do, if you want to know how to trade accordingly and in the moment, you want to check in at key times throughout the day and just kind of reassess what kind of market environment are we in. So have an idea in the pre-market where it's opening, where this could go. And then maybe a couple hours after the open, once volume has rushed into the moment, reassess and look at where we are, and then you can determine what you want to do the rest of the day based on that. Again, do that after lunch and then do it before the last hour of the day. You want to regularly be reassessing these things so that you can be on the right side of the market environment that we're actually in, okay? So here's some practical tips for you for trading in specific market environments. The first is this. As much as you can, always try to trade in the direction of the trend. That's going to save you so much money. When you see that the market is overextended, this can be through large gaps in price action from the previous day's close to where you're opening, or this can be with like RSI oversold or overbought conditions, which we cover in another video that you can watch on this channel. But you want to watch for reversals whenever the market is overextended. And then finally, stay out of the chop, okay? Unless you're fading moves to the ranges of edges when there's a decent range, whenever it's an inside day, the market shouldn't have your attention the way that it did before, or the specific ticker that you're trying to trade shouldn't have the same attention level given to it that it would normally have. So how do I know when to expect chop? How do I know when to stay out? Well, where are you in relationship to yesterday's high and low? And has there been any news that would cause price to continue if you are inside yesterday's high and low? That's a good way to, just a good rule of thumb for anticipating a choppy market. And I would just say it's better to join a trend day late and not make as much money as you could have than to lose a bunch of money to chop because you're uncertain of the type of environment that you're in. Okay, just a good rule of thumb there. And then finally, here's just a daily checklist recap of what we've talked about, okay? You want to zoom out. Identify the broader, every day, you want to know kind of where am I on the broader trend of whatever it is that I'm trading. And then after you've zoomed out, you want to zoom in and look at where is price in relation to the previous day. Then you want to approach every day with a trading strategy that actually matches the environment that you anticipate that we're going to be in, unless you're proven wrong. You have to be able to adapt quickly. And then you want to reassess and adapt as the day unfolds, okay? The sooner that you can spot the trend, the sooner that you can spot the day's environment, the more confident and profitable that you're going to become, okay? Practice this every morning. Review your trades to see how well you're reading the market. And I would even say, get as good at this as you can before you trade with real money, okay? Because this will save you so many losses if you understand market environment. Listen, if you found this video helpful, do not miss out on my weekly newsletter. Every week, I share my best trade ideas. I share you what you need to prepare for the week ahead. And I give you exclusive tips and education that you're not going to find anywhere else, all for free at the link in my profile, all right? So just look at the link in my profile, look at the link in my description, join the Legacy Profits Club newsletter, take your trading to the next level. And also, if you found this video helpful, give it a like, give it a subscribe, give it a share. All of that stuff helps me out, and it helps make what I'm doing worth it for my time and my energy. Hopefully you enjoyed this. Hopefully this was helpful for you. And hopefully you now have what you need to trade any market environment that you find yourself in.